Bitcoin represents thermodynamically sound money and thermodynamically sound property, and a modern high velocity economic energy system. So that being the case, anybody not using it is running on a 20th century system that's defective. And we talk about there's a meme, Bitcoin fixes this. Okay, well, if you're an individual, if you're a member of the working class and you keep working harder and harder and things get more expensive and you can never catch up, then Bitcoin fixes your economic problem. But Bitcoin fixes every economic problem of everyone that adopts it. So if, for example, if only individuals adopt Bitcoin, but banks and nation states and cities and states and corporations don't, well, how good is your life going to be if all the corporations collapse, all the banks collapse, and all the nations collapse, and all the cities collapse, and you're economically sound, but all of these other institutions are not, right? So it's inevitable that if Bitcoin is going to do the best good for the world, it needs to be adopted not just by the early individualists, right, the rugged sovereign individuals, right, that's one group, but
where's the car I want to drive more than anything? And so since I have kids, it's like 4 doors and stuff, be able to put the kids' seat somewhere. But also wanted to be really good with handling and acceleration.
What do you have?
You have a Model S?
I have a Model S 2021.
Yeah, Model S is sick.
What do you
I
have?
like the car. I mean, it's
like a perfect car.
Like provides. So it needs mega banks, and it also needs large institutional investors. So what we've seen over the past week is we see big banks, Deutsche Bank, Credit Agricole, Santander, right? These are interesting entities getting involved. Very important because those banks are the national champion banks, and they hold the public money, which means that if you're a public enterprise or a public institution and you want to actually fix your problems with Bitcoin, you're going to need to do it with the help of one of those banks. The news of the last week with regard to BlackRock is significant when you take it in its entirety. So BlackRock is probably the largest institutional money manager, and so they're being entrusted with the money of all these other institutions. And BlackRock applies for an ETF. The significance is you now have the establishment endorsing Bitcoin. It used to be the Bitcoin narrative was, oh yeah, BlackRock is against us, ESG is against us, the establishment is against us. The establishment was never against Bitcoin. They were merely indifferent. There are enemies of Bitcoin, but they're not in the establishment. They're actually not in-kind competitors to Bitcoin, other crypto tokens that want to be the next Bitcoin. They're the ones that have an interest in spreading that ESG FUD. BlackRock is just interested in doing good for the public as best they see it, and it's a big, diverse organization. You want to invest in silver or gold or land or whatever, then they'll handle it for you. So BlackRock decides to bring a Bitcoin ETF to market. That's an interesting data point, but the last 20 got denied by the SEC. So the next question is, why does BlackRock think they're going to get approved? They have this 570 to 1 win ratio, right? So people go, well, it's 99% likely you'll get approved. Why? Well, to the same day or the day afterwards, the EDX exchange got announced, and EDX is a non-custodial exchange backed by Fidelity and Citadel and Charles Schwab, so 3 of the big Wall Street firms. What's the significance of that? Well, the SEC has denied those 20 spot ETFs, and in the denials, they generally say, we're denying it because we don't see a Bitcoin spot exchange that's regulated and transparent, per our liking. and in the SEC cases against major crypto exchanges, the issue they take is they don't like the idea that an exchange is a broker-dealer and an exchange and a clearinghouse. Those are three separate functions. Well, so EDX is just one of those functions. It's just the exchange. It's not the clearinghouse. It's not the broker-dealer. So if you're an industry watcher, you say, well, the SEC can't approve this unless their fundamental objection is addressed or cured. So EDX coming online sets up a situation where the SEC can say, okay, well, this is trading on, between NASDAQ and maybe it'll trade through EDX, and there's a surveillance agreement per BlackRock, and EDX is not a clearinghouse, it's not a broker-dealer. So, the crypto industry now has compliant exchanges and a compliant product, so we can go ahead and approve that. Now, I'm not the SEC. I don't know what they'll do. They could do whatever they want to do. It's still possible. Theoretically, they would deny it for any number of reasons. Right? What's the materiality of EDX versus all the other crypto trading? I don't know. But EDX did come live in the same week when this news is breaking. And what happened in rapid succession is like 4 or 5 other Bitcoin spot ETFs get refiled. So if you step back and you look at this from the point of view of an indifferent investor or an indifferent industry watcher, the conclusion would be, it looks like a spot ETF probably will get approved. There's massive political pressure to approve one. The circumstances have changed, and now there's a way for the SEC to approve it without backtracking on its previous legal and policy guidance. Certainly there are a lot of Wall Street entities that have a vested interest in seeing this happen. If you're an institution, one way to get Bitcoin exposure is to buy the underlying asset, but there have been challenges with finding the right exchange to buy it on and the custody arrangement, and so a simpler way to do it is to buy the spot ETF. There are trillions of dollars of capital that is required to invest in a security that trades in these compliant forums is understating the obvious. It's tens of trillions of dollars. So there's a lot of capital that can't buy the Bitcoin or self-custody the Bitcoin. They don't have the charter. Maybe it's against tax code. Maybe when they raised $10 billion from public investors, they raised it to invest in securities but not invest in commodities or property. So,
Morty guy, huh?
Rick and Morty's great.
What else do you watch? Anything else?
I just thought I should rewatch some of those episodes.
You seen
regulatory clarity, which is tantamount to an endorsement, right? The engagement of Fidelity, Citadel, and BlackRock and Schwab in this exercise is, Charles Schwab is literally synonymous with Wall Street. Like 100 years of Wall Street. So what you have is Wall Street coming together to offer securities and exchange services and indirectly custody services for mainstream investors. And if we look out about 12 months, if I was saying, well, what are the key milestones to drive mainstream adoption of Bitcoin? Well, one of them clearly is a spot ETF. The second is the designation that Bitcoin is an asset class, right? The recognition of it as a legitimate commodity. It's a big deal, And when Jerome Powell says it's not going away, when Gensler and the head of the SEC and the CFTC both say it's a digital commodity. Well, digital commodity might not sound like much, but when you go down to the next round, which is like it's a Ponzi scheme or it's a scam or it's tulip bulbs, right? The difference between tulip bulbs and digital commodity is a 0 versus a 1. And I have said before, and I would repeat it again, if it's not going to 0, it's going to 1 million. It's either nothing, right? If it's nothing, then it's getting scrubbed out and banned. And of course, we now know that it's not getting banned, right? There's no way that Fidelity, Citadel, BlackRock, Charles Schwab, Deutsche Bank, Credit Agricole, Banco Santander all decide they're interested in this, right? They're not endorsing a tulip bulb, right? So once you go from 0 to 1, then the question is, okay, well, it's an asset class. If it's not going away, then what's it worth? Well, it's worth 1% of the assets in the world. So 1% drives it up by a factor of 10 to 20, right? Once you get to a 1% exposure. So the recognition as an asset class is a big deal. The availability of a spot ETF is a big deal. The normalization of accounting via fair value accounting, which is the FASB initiative, it's another big deal. And then the halving, right, in less than a year is a big deal. So those are 4 pretty serious milestones that we're staring at right now. And I think, Wall Street and the general community is kind of just internalizing this.